July 23, 2026. Today's briefing is not about dramatic moves or short-term speculation. It is about a market that continues to test which digital asset networks can support regulated finance, institutional settlement, and real-world infrastructure. On the XRP side, one of the more notable developments is the continued inflow activity into spot altcoin ETFs, with XRP among the names drawing modest demand. The size of those flows is not the story by itself. The signal is that institutions are still allocating selectively, and XRP remains part of that conversation because of its long-standing positioning around payments, liquidity, and settlement use cases. In a cautious market, any persistent ETF interest suggests that XRP is still being evaluated through a utility lens, not just a trading lens. The other key XRP headline is Ripple's RLUSD stablecoin being discussed alongside BNY Mellon's work on 24/7 tokenized U.S. Treasury settlement. That matters because it puts the spotlight on the plumbing of institutional finance: custody, cash management, and settlement timing. If regulated stablecoins and tokenized assets can move on infrastructure that supports continuous settlement, then the value proposition is not speculation, it is operational efficiency. For Ripple, that keeps the broader thesis centered on enterprise-grade payment rails and regulated financial workflows. On the HBAR side, the same ETF flow report also included Hedera, which is notable because it places HBAR in the same institutional screening process as larger, more familiar assets. Even modest inflows matter when the market is cautious because they show that allocators are still looking at networks with clear enterprise narratives. Hedera's appeal has always been tied to governance, predictable performance, and business-facing infrastructure rather than retail-driven momentum. We also saw reports around an institutional custody upgrade and an EVM-related upgrade on Hedera. Together, those developments speak to something important. Enterprise adoption depends on more than throughput. It depends on custody, integration, compliance, and developer access. A custody improvement helps institutions manage operational risk. An EVM upgrade helps the network fit into existing blockchain development workflows. That combination is what turns a blockchain from an abstract concept into a platform that can actually be deployed. The broader signal today is straightforward. XRP and HBAR continue to appear in the same institutional conversations around ETFs, custody, tokenized assets, and enterprise infrastructure. That does not mean adoption is immediate or guaranteed. It does mean the market is increasingly evaluating both networks on their ability to serve regulated finance, not just on narrative alone. In a selective market, that is the story to watch. The takeaway today is that the institutional case for XRP and HBAR is still being built through infrastructure, not headlines, not financial advice, educational content only.